Welcome to another edition of Triangle Investor Interviews. I'm your host, Lucian Valkovic, and before I announce my guest, just a reminder of a disclaimer. This interview and all my interviews are not a recommendation to buy, sell shares, products, or services. Always do your due diligence and consult with your financial advisor. And today's guest is Lon Shaver, president of Silvercorp Metals, a leading silver producer with assets in China and Ecuador. Mr. Shaver, thank you for joining me today. It is great to have you.
Thank you. It's my pleasure, Lucian.
Yeah, you're for the first time in my show, so we have a lot of things to cover. Let's open our discussion with the silver market. If you agree, how do you see silver market evolving in the remainder of 2025, particularly in the terms of demand drivers like industrial use and investors' interest?
Well, I think barring some kind of an economic slowdown, in the global economies, we would expect that the drivers that we've seen in the silver market, which has been electrification and also obviously solar power generation, we see that continuing to remain strong. Those drivers are still there, and so looking at that demand, we see that demand consuming a lot of the available silver that is being produced. And anyone who's following the market knows that we've been seeing deficits for sort of 5, 6 years in a row here.
Yeah, that's a good point. We will cover your Q3 2025 earnings, but you highlighted that the potential risk from tariffs impacting global economic activity and metals prices. How is your company positioning itself to mitigate volatility in the silver prices, and what pricing assumptions are you using to your 2025-2026 projections?
Yeah. Well, I think, first off, in terms of impacts, we're not really going to be impacted any differently than anyone else, except for what happens to the global price of silver. And, there are some different dynamics in the sense that, we do price and sell our silver domestically within China. And so sometimes there's a bit of a price differential. And in fact, in recent years, because of the growth in the solar power industry, what used to be more of a discount for the silver price in China has shrunk and it sometimes flipped to a premium because of that. But ultimately, like any other mining company, we're a price taker in terms of what the commodity price is. So really, we just have to be optimistic that the world economy keeps going forward here, and all these uses for silver as well as copper, all the other metals, can continue ahead. From our standpoint, how do we protect against it? I think what we protect, our company from lower metals prices is trying to drive to a lower cost of production. And I think, most people know the company know that Silvercorp has traditionally had a lower cost of production, and that's what's allowed us to generate, a positive free cash flow through years when the silver price has been quite a bit lower. And so that really is, in our way, the best way to protect against what really something that every mining company is subject to, which is, the global supply and demand for the metals that you produce.
Yeah, let's cover financial performance drivers. You announced, I believe, May 22nd was the news release, reported adjusted net income of 75.1 million and operational cash flow of 138.6 million for fiscal 2025, a significant improvement over the prior year.
Yes.
Yeah, definitely. What were the key operational or market factors that drove this 39, almost 40% revenue increase to almost 300 million?
Yeah, I mean, some of that was price driven. And so it's nice to see that when the prices have been higher, we haven't just reported higher revenues, but it's actually fallen to the bottom line, which is a great criticism of many mining companies. When higher metals prices come, they don't necessarily make more money because of the fact that cost inflation eats away that extra margin. So we benefited from higher prices, but also we had really a bit of a record year in terms of production. So our production numbers were up. And I think one, very significant thing, you commented on the full year, looking at the fourth quarter specifically, There were a couple things that made Q4 very special in our opinion. And we actually think the market sort of missed some of this in the reaction to the results. Now, first off, what we the our Q4, which ends in March, is always the quarter that has Chinese New Year holidays in it. And if anybody who follows China knows, Chinese New Year is a very important thing, and our facilities are usually shut for a minimum of 2 weeks during Chinese New Year. This year, two very important factors came to bear on our results. One, earlier in the year, we've been able to start mine production exceeding our milling capacity. So we're able to get our mining rate higher. So we actually built a stockpile of ore over the course of the first 3 quarters of the year. So that was one factor. The other factor is that in the year, we also completed a mill expansion. So we took our milling capacity from 2,500 tons per day to 4,000 tons per day. And so what happened in Q4 was we shut the mines as usual, but we kept the mill running and we kept it running at this now expanded rate. So we milled off a lot of that excess ore inventory that we built up over the year. So that's what led to what was a record quarter in Q4, which usually is our softest quarter. And in fact, this is the first Q4 on record where we had positive free cash flow. Usually we have a bit of negative free cash flow, as I mentioned, because of holidays and catch-up payments, and we more than make up for it in the other 3 quarters of the year. But this year we actually had positive free cash flow in Q4 as well. So really quite a remarkable performance from our operations. And now we're obviously in a good position going forward as we continue to ramp up our mine production. At Ying in particular, we have this expanded milling capacity.
Yeah, I would like to highlight also a 7% increase in all-in sustaining costs for silver. That is to, I believe, 12.12 per ounce. That is attributed to higher mineral resources tax and royalties. What strategies are you implementing to manage this rising cost while maintaining profitability?
Yeah, I mean that's really a cost that you would be paying that cost one way or another. And I guess the best way of describing that is the model sort of switched from an upfront payment in advance of processing the resources to a revenue-based royalty model. And so in the past, what we've had, consider it like what had been a capital item that you would have paid to renew and to identify resources that you were going to mine, and that would have been a mineral royalties tax paid to the government. The government has now changed and moved away from that model and said, let's not have these big lumpy one-time payments from time to time when you renew your permits. Let's just run it on a revenue basis. So what we've done really is a bit of a shift, that's all, in terms of where the numbers are showing up and when.
Mhm. Total capital expenditures rose to, I believe, 86.6 million in fiscal 2025. Can you provide more detail on how these funds were allocated across the projects and how they position Silvercorp for future growth?
Yeah, and the bulk of that capital was spent at Ying, and the reason for that is, we see a very long and prosperous future for Ying, but we also see a need for some transition, some changes. And so when you look at that capital, roughly 7 million of that was for that mill expansion that I mentioned. Call it 25 million was for expanding, well, building actually the third tailings storage facility. So at Ying, we had two tailings storage facilities. The first one was coming up to the point where we needed to close it and reclaim it. So we now have number two and number three operating. So that was completed in the year. And then a fair bit of that spending was again in the mid-20s was related to ramp development. So we've begun a transition at Ying to move away from the very labor-intensive mining method that we've been using and start to incorporate a bit more bulk mining methods. And so to do that and to get efficiencies in terms of access, moving people, moving equipment, and actually moving the ore out, we're going to move away from having the shafts and tracked carts within the mines. And so we've been opening up a more thorough ramp system that you can basically drive pickup trucks with people, or you can drive the ore trucks down to get the ore. So we continued last year with the spending on those ramps. We have a bit more of that spending coming forward in the next couple of years. But we're already starting to see both efficiencies in terms of access. And these ramps have also opened up some new areas where we're now seeing geologically some new mineralization that we weren't aware of before. So, Ying is kind of like this mineral gift that keeps on giving, in the sense that we know we've got a long life ahead in terms of the traditional silver, lead, zinc, but now we're identifying zones of gold and gold copper that we think can be an enhancement to the operations.
Sounds very good. You announced in early May an updated mineral resource estimate for the Condor project in Ecuador. Can you elaborate on the key changes in this estimate and how they impact the project's economic viability and development timeline?
Yeah, well, it's early to talk to the latter point in terms of economic viability and timeline, but what this is a first step in our plan to rethink of this deposit and shift away from a big bulk low grade open pit to a more discrete higher grade underground operation. And so what we did was we looked at two deposits in particular, went back to the drill data and looked at it, raising the cutoff grade, and then looking at, well, what kind of a resource can we identify that could be conceivably mined in an underground fashion. And so we're pleased with those initial results. We're going to transition now to looking at completing a PEA on the project by year end. We've announced that we're going to do a modest drill campaign just to put some selective drill holes in terms of some key areas that will provide us some valuable information. And then what we're trying to complete also in this year is the permitting to put in some twin access ramps down that would be initially used for exploration to really get in, have a look at, open up, and understand these high grade structures that we've identified are trending in this northwest direction. The Condor project really has two different types of mineralization: this high grade that follows these structural trends, and a more disseminated flat-lying mineralization. And the previous PA thought about taking both of it at the same time in a big pit. But we think from a capital, timing, permitting, community relations, looking at building this higher grade underground gold mine is a better plan going forward. So that's what we're working on this year, and in parallel, looking to get to a point where we would complete a PEA, move into feasibility, and then have, as a result of these tunnels, access to the ore body to be able to bring it on stream quicker once we got surface facilities permitted and constructed.
Yeah, your company has targeted production at El Domo project. We are now at Domo. So you target their production by the end of 2026 with,
Correct.
yeah, with 20, I believe two, I forgot the budget for that project. You will remind me. Can you provide me more details of on the key milestones in the construction schedule and any potential risk that could delay this timeline, such as regulatory or environmental challenges? Can you tell me more, please?
Yeah, I mean, on the latter part, we're not anticipating any challenges. Of course, this is mining, and we're talking about mining in a country that this will be the third commercial scale mine built in a country that has other mining, but and has obviously great geology and other deposits, but hasn't really built a big mining industry like many of its peers. From a timing standpoint, really, we're looking to start, the more significant earth moving and stripping of the areas around the pit later this summer in kind of August timeframe. This fall, start working on the process plant construction. We've pre-ordered the equipment, so the equipment isn't really a concern. And really, it's quite a quick build cycle, really from this summer through to December of next year to pull it all together.
Yeah, this is a big investment in Domo, so a significant commitment. How are you balancing this expenditure with other operational needs, such as 25 million investment in the Ying mine? And what returns do you expect from El Domo once operational? Maybe it's too early to speak about it, but you probably have some early projections.
Yeah, well, I think the key thing to think about in terms of that capital figure at El Domo, which is 241, based on the work that we put together, is we have, as a result of the stream arrangement that's in place with Wheaton, we have a credit balance of 175 million that we can draw against from them. So as we're building the mine and we hit certain milestones, we can go to Wheaton and basically draw against that 175 million in these four separate tranches. So really, if you do the math and you look at what the balance is, we can easily fund the remaining capital out of that 240 once you back out that Wheaton contribution. So we're quite comfortable with that. We were sitting with 369 million in cash as of the end of March, and that's more than enough to fund our growth programs as well as look at some other growth opportunities and acquisitions.
Yeah, that said, you have a strong cash balance and a share repurchase program. How are you prioritizing shareholder value creation in 2025, 2026, particularly in balancing dividends, buybacks, and growth investments?
Well, I think the key word that you mentioned is balance, and so it's a matter of looking at sort of all the different metrics and all the objectives that we're trying to achieve. I think the key thing about dividends is right now this has been a stable, although modest dividend, but what it does is it's more symbolic, and what it does show to investors is a commitment to pay dividends and to make sure that investors are getting some return regardless of what the share price is doing. But at the other hand, we haven't increased the dividend because we're looking to grow and become a multi-jurisdiction, multi-asset company. So if we paid out all the money in dividends, we wouldn't have that fuel to grow the company. Similarly, on the buybacks, we could go out and spend all the money on buybacks, but then we'd have less shares outstanding, less liquidity, and no money to grow, and we'd be basically the same company as we are now going forward. So again, buybacks are opportunistic. It's a case of looking at those moments in the marketplace when things get really noisy, really messy, and we say, this is a time when our shares are trading ridiculously low, reflecting a situation that really just could never apply to the company. Let's use some of that money to buy back some shares. But I think the key consideration is we've been building this cash balance, and we raised the money we did last fall from our issue of convertible debentures to build up funding to be able to grow the company and look at acquisition as well as funding the capital costs of building more mines so that we can be a bigger and more diversified mining company.
Yeah, you touched briefly on M&A. I would like to hear your take on M&A. Are there any additional M&A opportunities you are exploring to further diversify or expand Silvercorp's asset base?
Yeah, we're very active. We're always exploring new ideas, whether those be now existing production situations, which we're now better positioned because of that convertible debenture to look at existing production opportunities or new development opportunities. We're always looking at new ideas, trying to find assets that have good geology, good fundamental economics beneath them as a result of that geology processing, mining, but also projects in areas where there's either permits and you can also see a path where you can get support from key stakeholders. So, government at different levels, the community, those are the key drivers for us for looking at, new ideas, new opportunities.
Yeah, with your exploration projects expanding now into jurisdictions like Ecuador, what strategies are you implementing to balance the differing environmental, social, governance standards and operational risks compared to your established operations in China?
I mean, I think we take what we know in terms of having successfully built 8 mines, um, 3 milling facilities, tailing dams. We take what we've done and we've done successfully from a technical standpoint, but we certainly do have to, invest in building a team with local knowledge, local understanding, and backfilling that as we go forward, so that we can adapt to these other jurisdictions, other environments. So whether that's staffing up, locally on site, adding to the team in Vancouver, also adding resources, maybe technical, in at our operations in our office in Beijing to help support the development, of these mines. We will be growing. We will be adding people to be able to accomplish this in Ecuador and beyond.
Sure. Alon, final question. News flow from the company. What can investors expect in the upcoming period?
Well, I think as we move ahead with El Domo, as you pointed out, we will have some updates there. We've signed and locked in a contract for the bid package number one. We've broken the construction of El Domo into essentially 5 different bid packages. Three of them are major and related to the key items. And so within the next couple of months, I would expect we'd have some news speaking to further packages being locked in with whom, the terms of that, and some updates on the scheduling and timing of each of these items. So I think that would be one key element. Another would be looking at some news at Condor, both the drill program, as we move forward with the PEA, permitting progress on being able to move into those underground declines. That would be another key item. We haven't mentioned at all in the interview our stake in New Pacific. We have 28% of New Pacific, which has two great projects in Bolivia. As they move forward and look to secure the permits, that could be a catalyst for us going forward this year. So that's another thing to keep an eye out for. And then I guess, the other, which we talked about at the very outset, is just looking at as we continue to evolve and develop the Ying mine in particular, as we demonstrate transitioning to this more bulk mining method, getting our production rates up and having the mill to mill that ore, as well as we would expect some development ore from a satellite project called Quanping that we're going to be moving ahead and building this year, which is about 33 kilometers north of Ying. These are all, I'd say, little milestones, little catalysts that all add up to showing that we're on track with our plans.
Sounds very good. Lon, I really wish you luck with all your projects, and thank you very much for coming to my show. You explained a lot, and like I said, good luck.
Well, thanks very much. I appreciate the opportunity, Lucien.